Yes, mortgage rates move slightly higher, but there are two much bigger developments that could shape where the housing market goes from here. The first is a major housing bill that just passed the House with overwhelming bipartisan support. The second is why I personally don't think we'll see another Fed rate hike this year. So let me explain. According to Freddie Mac, the average 30-year fixed mortgage increased from 6.47 last week to 6.49% this week as of June 25th, 2026. Now, a 2 basis point increase really isn't a significant move. Mortgage rates have been stuck in a pretty tight range because markets are trying to balance inflation, treasury yields, Federal Reserve policy, and global events. So that's why I always tell people not to get caught up in the day-to-day movements. A change of 2 basis points isn't what's going to determine whether it's a good time to buy a home or not. The bigger question is what happens over the next several months? And I think that's where the real story is. This week, the House passed the 21st Century Road to Housing Act with overwhelming bipartisan support. Now, this bill isn't going to lower mortgage rates and certainly not overnight, and that's not what it's designed to do. Instead, it focuses on increasing housing supply, cutting unnecessary regulations, expanding access to mortgage financing, and most importantly, helping limit large institutional investors from buying up single-family homes. And that last one, that's the biggie. So why is that important? Because affordability isn't just about mortgage rates. It's also about inventory. And for years, we've simply not built enough homes to meet demand. And when supply is limited, prices stay elevated. If we increase the number of homes available over time, that's one of the few long-term solutions that can actually improve affordability. So now let's talk about interest rates, because I know that's what everyone wants to know about. It's the biggest thing searched for. And here's my opinion. And it's just that. It's my opinion based on what I'm watching in the market. I don't personally believe the Federal Reserve will raise rates again this year. So I could be wrong. Absolutely. The Fed follows the data, and if the data changes, they'll change their approach. But based on what I'm seeing today, I don't think another rate hike is the most likely outcome. One of the biggest reasons inflation became a concern again recently was the sudden spike in oil prices after tensions escalated in the Middle East. There were real concerns that if the Strait of Hormuz became blocked again, or if shipping through that region was disrupted, oil prices would move much higher. And higher energy prices tend to ripple through the economy. Transportation costs increase, manufacturing costs increase, businesses pass those costs on to consumers typically. And that can make inflation stick around longer than anyone wants. But so far, we've seen those fears begin to ease. Oil prices have fallen significantly from the recent highs that happened right after the war, and they're getting close to where they were before the conflict escalated. If that trend continues, one of the biggest short-term inflation pressures starts to fade. And if inflation continues moving lower, I believe the Federal Reserve will have less reason to consider raising rates again this year. In fact, if inflation cools, there's a reasonable chance we could see mortgage rates gradually move lower as well. Now, nobody can predict exactly where rates are going. Anyone who says they know for sure is either guessing or lying. So, there are still risks. If tensions in the Middle East escalate again, if shipping through the Strait of Hormuz is disrupted, or if we get unexpected inflation data, everything could change. Markets adjust quickly, but based on what we know today, I'm cautiously optimistic. The data is moving in that direction, and that could be supportive of lower mortgage rates over time, but not so much in the immediate future. So don't let a tiny weekly increase in mortgage rates distract you from the bigger picture. Watch inflation, watch energy prices, watch what the Federal Reserve says, and watch this channel. And keep an eye on housing policy, because increasing supply may end up being just as important as where mortgage rates go. If you're wondering what all this means for your buying power, or whether now is the right time for you to buy, I'd be happy to help you run the numbers. Every buyer's situation is different, and there's no one-size-fits-all answer. So if you found this update helpful, make sure you follow along. I'll keep breaking down what's happening in the mortgage and housing markets each week so you can make informed decisions without all the sensational headlines.